All right, so it is 3:01, so we can go ahead and get started. Hello, everyone, and welcome to Chmura's second annual holiday webinar. This one is titled The Labor Market During the Year-End Holidays. So my name is Holden Andrews, and I will be your host for today. Our speakers are CEO and Chief Economist Chris Chmura, Account Manager Frank Carter, and Client Relationship Manager Anthony Marchetto. So if you're new, we generally like to give a sort of background on who we are and what we do. So Chmura provide labor market data and analysis so our clients can make informed decisions to help communities and businesses thrive. We were founded in 1998 by Chris, and we have two offices, one in Richmond, the other in Cleveland. We are economists, data scientists, statisticians, and business professionals who truly care about helping your community and your business grow. Two things that drive us are client satisfaction and success. And as you'll see in 1 minute, excellence is truly our first priority, both in customer service and data quality. So these four kind of principles right here of excellence, thorough, accurate, and useful are the ideals that guide our organization. They are what drive us and what we aspire to do and be every single day. One way that we really try to exemplify these values is through our weekly economic update report. So this is a free report sent out once a week with the most up-to-date national data. If you are interested in receiving these emails and would like to be on it, I'm going to put a link in the chat, and then when we send out the slides and recording tomorrow, as you can see, there's one on the slide as well. So before I pass things off to Chris, I do want to mention again that the slides and recording will be sent out tomorrow. And then if there are any questions during the presentation, please don't hesitate to put them into the chat. So Chris?
Thank you, Holden. And as Holden said, this is a report that we put out every week, usually on the weekend, and especially now with the economy continuing to show signs of inflation. You can see it here at the top, and the labor market continuing to tighten. We're thinking that this might be an interesting report for you to take a quick look at. So with that, welcome for this discussion about the labor force and the year-end holidays. As usual, I'll start off with the National Economic Update. Sales and GDP are very strong. Stimulus savings, though, is on the decline. A lot of it has been spent, and we need to closely watch the Omicron variant or other variants. Typically, we economists use things like assumptions to run our models, such as interest rates, how much are they going up, what is the price of oil, but in the last 2 years, we've been looking to the medical community and epidemiologists to help us understand when it's going to be safe to get back into the economy, which is driving a lot of our forecasts. So job market remains very tight, and you'll see that in the data here. The participation rate is very low. We'll talk a little bit at the end of my part about inflation. It appears that the Fed has now said it no longer is transitory. Transitory, that is, it's not temporary. It's going to be here with us for a bit longer. And then after that, Frank and Anthony will talk to you about JobsEQ and the holidays. So beginning with the national overview, GDP, the broadest indicator of economic activity around the globe's countries, define recessions as 2 quarterly declines in GDP. But here in the US, we have a National Bureau of Economic Research who look at the data on a monthly basis and determine when it began and ended. And they declared that the recession was 2 months long, but it straddled over 2 quarters. So here you see the recession, first and second quarter, and then the strong rebound. And we've had fairly strong growth after that. The third quarter, latest data available, was around 2%. And this confirms, again, the importance of us being able to get beyond these variants. This is when the Delta variant picked up, and we saw rates going up. People were not out spending as much. So this forecast going forward assumes that the rates of COVID continue to stay steady or drop or not increase as strongly as we saw about a year ago. If so, we're looking for growth around 3 to 4 to 5%. over the next year and a half. To give you a baseline, growth above 2 to 2.5% is considered very strong. So for the next year and a half, with all the stimulus and still the Fed easy in terms of their policies, we expect to see some strong growth for the next year and a half before it slows. Now, this gives you a sense of personal savings. This is for the economy overall, households. You can see going back to 2000, gray shaded areas are recessions. That is around $500 billion in terms of savings. We got up to a little over $1 trillion around 2013, and it increased at the end of this expansion as people were making more money. And then it shot up because of the CARES Act and the stimulus that was given to households. Some of that money was spent. Fourth quarter, households got more money, and first quarter 2021 is the last round of spending that households have received from the federal government in stimulus checks. So here you can see we're still at almost a $2 trillion rate in terms of savings. This was at the end of the third quarter. So individuals have money to spend, and this may be part of the reason why the participation rate is still quite low. Some households or individuals feeling like they don't need to get back to work right away because they still have some savings with them. So on the left-hand side, we're looking at the unemployment rate all the way down to 4.2%. An unusual recession that we've been in. Typically, the unemployment rate would not drop this quickly coming out of a recession, but you can see we're almost down to rates that we had at the end of the last expansion. On the right-hand side, participation rate going all the way back to the 1950s. You can see it increased in the 1970s and 80s when the baby boom was coming into the economy. More women were coming into the labor force. It topped out around 67% and had been declining a little bit due to retirement. It plunged when we went into the COVID lockdown and came back up. Many people, analysts, feel that we're not going to get to these previous levels because of, for the most part, the number of people who retired out of the economy that won't be coming back. So a decline from 63.3 to 61.8 participation. That's equivalent to a reduction of 2.4 million people in the workforce. In November, we had 148 million people in the workforce. Job openings in October were 11 million, much higher than we saw back pre-COVID, 6.8 million in December of 2019. So the job market is very tight. Businesses are opening back up because of demand for their goods and services as people are coming back, spending some of that savings they have. And at the same time now, we have this double whammy of the quit rate is very high. So gray shaded areas, again, recessions. This data only go back to 2000. And you can see people don't quit their job during recessions for fear that the place that they're going to, they don't know the business as well. Maybe they won't last there very long. And if that doesn't work out, then it would be hard to find another job. Coming out of recessions, the quit rate goes up as people feel they can find other jobs. And the same happened during the COVID-19 recession. It plummeted. But the surprising thing is that it has continued to grow. In September, 4.4 million people quit their jobs to take other employment. In October, it was 4.2. So the September number was the highest on record. 3% of all people working quit to take other jobs. It dropped a little to 2.8%. So the job market remains very tight. And we're starting to see some inflation complications. So here on this next chart, you're looking at the consumer price index, percent change from a year ago. It's one way to measure inflation. That's the one that the media usually prints and pays the most attention to. But the Fed pays more attention to the PCE, the Personal Consumption Expenditure Index. And unlike the CPI, it was up 5% from a year ago, CPI up nearly 7%. And the reason why the Fed pays attention to the PCE is because the basket of goods changes every month. So if this month we're spending more money on gas and less money on food, then the shift in the proportions changes as well. Whereas the CPI is a basket of goods and it only changes every 3 to 5 years. So inflation again going up, and because of that, we're seeing the employment cost index go up. So this represents the cost, wages, as well as compensation for businesses. So businesses are seeing compensation overall going up 4.5% for a year ago. And as you can see, that's the highest on this chart here. And you can also see that over the past few years, it has really started to increase at a faster rate. And of course, that's because of the inflation rate that's going up right now. So the big question, at least until yesterday, the Federal Open Market Committee meets 8 times a year to talk about whether they should be more stimulative to the economy or whether they should increase interest rates. And up until a week or so ago, they've been saying inflation is transitory, meaning it's only temporary. And that is, it's temporary because we had a rapid increase in demand after the COVID shutdown ended. And they expected that rapid increase in demand for goods would slow, especially if we don't get more stimulus. And then also we have supply chain disruption. So there's all this demand for goods and services, and we can't get enough of the supply here to the US. That's expected to ease in the second half of 2022. So that should help bring the inflation rate down. But some people think that it's going to take another year. It won't be until 2023 that we see all the supply chain issues gone. So even so, recently the Fed has started saying, and here you have a quote from St. Louis Fed President Bullard, who said that inflation has surprised them on the upside. And then the Fed Chair Powell back in late November said it's probably time to retire that word transitory. And yesterday when they released the minutes after the FOMC meeting this week, clearly they said, yes, inflation is picking up a bit more than we had expected, but they expect inflation to come down by the end of next year, and certainly more so the year after that. But because of inflation, they're still going to be stimulative in terms of the economy, but by March of next year and toward the middle to end of next year, they expect to start increasing interest rates. So if we continue to have the persistent staff shortages, though, that will accelerate wage inflation. So the big question is, how much is the Fed behind the curve here? How much will they have to push up interest rates? And hopefully they will be right and not have to increase rates too much in order to slow down the pace of inflation overall. So the U.S. economy doing well, a little bit concerned about inflation. We're still looking at a very tight job market. Probably will last at least another year in terms of the tight job market, maybe 2 years. But this should be one of the best Christmas selling seasons or holiday selling seasons that we've seen in many years. So with that, I am going to turn it over to Anthony and Frank.
Hi, everyone. So before Frank goes through his festive example, I just wanted to give a quick note and say we will be sharing screens using JobsEQ, and if you have any difficulties where you get a loading screen or it freezes for any reason, feel free to just refresh the page or refresh your browser as you normally would. You will stay in the webinar, and this will bring up whatever is being shared. So just as a note, if you experience any technical difficulties, refresh your screen first, and if that doesn't solve it, I can fix it on my end. So, Frank?
Thank you, Holden. Thank you, Chris. And to echo what Chris said, just wanted to thank everyone for taking time out of their day to jump on our webinar. We know it's a busy time of year between work and personal obligations. And so I know myself personally, I'll be the guy running around on Christmas Eve trying to get everyone's gifts. So, and speaking of shopping and what Chris alluded to with the spike this year in Christmas shopping, obviously there has to be folks who in the workforce are supporting the roles that are needed to do holiday shopping. And so what I'm going to do is share my screen with you all and walk through within JobsEQ the analytic real-time intelligence, which is our job postings analytic. And before I do, can everyone see my screen moving up and down? And as Holden said, you might need to refresh.
There you go.
It's showing now, Frank.
Yep, you're good.
Thank you all for confirming. So let me know, obviously, if at any point it freezes and we need to do a refresh. So this is our real-time intelligence job postings analytic within JobsEQ. Personally, this is one of my favorite analytics, quite honestly, because of just how powerful and vast the tool is. So for instance, this is something that gets updated every single day. We pull from over 40,000 verified sources online to pull in these jobs. And we also have a very strenuous process that deduplicates the job ads. So when I say that, if there's a job posting that is listed on Indeed, Monster, and Career Builder, it's only going to be counted once, so that the job postings are as accurate and up to date as possible. And that's one thing here at Chmura that we do take very seriously, is just data integrity and having up to date and accurate data. So when looking at this chart, and I'm going to walk you all through each one of these different categories and what they mean, and just as it relates especially to the holidays, we're going to be taking a look at a lot of retail sales persons. And so, as Holden alluded to, if you have questions, don't hesitate to pop them into the chat, and we'll be happy to answer them. And so what we're looking at here are, within JobsEQ, is all the different ways, or right now we're looking at the New York MSA region. One of the great things about RTI is you can use a city, you can even go down to the county, or a custom region if you'd like, based on whatever you're trying to query to give you those results that are going to be truly indicative. And I also wanted to make sure that you all are aware, we just had a few really exciting updates within RTI as it relates to being able to filter more easily and efficiently in terms of finding data, plot trends, and also being able to use custom date ranges, which I'll show you all in a second, as well as time series exports. That's something that, again, consistent throughout the analytics within JobsEQ, is that you can export the data, and when you can also query by job ad status. And so those are things that we actually just recently implemented. And so I'll walk you through some of those things today. And as we move through this, what I want to look at first is, you can see here on the right-hand side within our query window, the region, like I mentioned, that we have populated. I chose the New York MSA. And you can see that there's a total of over 1.7 million job ads, and it defaults over here on the right-hand side to the last 12 months, as you can see. You can change that, and I'm going to do so in a second just by simply clicking the drop-down arrow. And now you can see what I was referring to a minute ago in terms of how you can use these calendars to customize your date range that you're looking for, or you can use one of these settings over here on the left-hand side. So for instance, I'm just going to look at the first 12 or the last 12 months. And on this line graph here, you can see in the blue, we have the last year, and in the gray is going to be that same time frame from the year prior, based on whatever date range you're querying. If I continue to go down, what we have here is a list of all of the top occupations, and as you can see, the overwhelming majority right now are retail salespersons, which makes sense given the seasonal spike to support holiday shopping. And I'll come back to this in a second. As we continue to move down the page, we have the locations in descending order of where all of these job postings are coming from. And again, I'll come back and show you how you can filter easily to look at a certain location if you would like. Moving right along to employers, you can actually see the top employers that are hiring in descending order. And if you wanted to, it condenses to 10 rows just to simply see everything. But if you wanted to look further down, so for instance, if I click 25, now it expands to the top 25. So places like Macy's, ShopRite, Walgreens, etc. And so if I wanted to take that back, just come over here and very easily can go back to the 10 rows that it was showing previously. Then we have the top certifications listed in descending order, things like driver's license, life support, etc. Hard skills. So all of the hard skills that are being asked of in these job postings are now listed in descending order. We also have the soft skills that are listed and being asked of in those job postings. Moving right down, we have the job titles themselves so that you can see what the majority and the top ones that are going to be listed. The education levels, the programs themselves, as well as the job types. And so you can actually, and what a lot of employers will do is they can filter now by full-time or part-time, with full-time typically being the top one, but part-time as well, especially right now with it being, the holidays, and there's a lot of folks who may be home and are looking for some seasonal part-time work to make some extra cash for any of the holiday spending they may be doing. And so what I'm going to do is go back to the top and show you all how you can filter by certain things, and specifically as it relates to the theme of holidays and holiday shopping, we're going to look at some of the retail salesperson's positions. And if I come over here, there's a couple different ways, again, that you can filter things within RTI. You can simply come over here to these little check boxes, and if you click one, you can hit add to filters. And what that's going to do is it's going to rerun everything in less than a second to now show everything as it relates to what you chose to filter. And you can also notice now that we're looking at just retail salespersons, that little filter has been added over here on the right-hand side within your query window. And if you ever want to reset or get rid of it, you just hit this little X and it will go back to what you were previously looking at. Same way with the filters themselves. You can come over here and actually filter by the certain occupation that you're looking for. And it's going to actually pre-populate some of the options as you continue to type. So there's a couple different ways, again, just to make it as easily and as efficient for you to query things and search things within JobsEQ conveniently and efficiently. And so if I look at retail salespersons again, you can see that over the last year, there's been over 68,000 job postings. And so if I click that and add it to the filter again, we can notice that if I take this and I move it to, let's say, the last 3 months, when holiday and seasonal jobs tend to increase, you can see that there's been just a little over 30,000 job postings active during that time frame. If I come back up here and look at the last 6 months and apply that, you can now see that there's been 45,000. So it's pretty apparent that in the last 3 months or 90 days, taking us back to the time that because of Thanksgiving and the holidays and things like that, you can see the spike in terms of what the holiday impact does have on the job postings and the demand in the job market. So if I continue to scroll down, like I mentioned earlier, you can also view all of these different filters in different ways and save them. You can clear them. You can search by keyword. You can also search by wages and either break it down annually or hourly, especially as it relates to seasonal work. This is really helpful. You can do it by duration, ads closed, job postings. If I come down here to the list of employers, we've got places like Bloomingdale's, Walgreens, Macy's, And as I mentioned, if you wanted to add another filter and say, if I wanted to look at just the job postings that Macy's has, well, now I can just simply click add to filters. And now we have 2 filters running within the retail salespersons as it relates to Macy's. And if I want to get rid of that, just as I mentioned earlier, simply click the X and it's going to take you back to what you were currently looking at. And so if I continue moving down, again, you've got the certifications listed, the hard skills, obviously with retail sales being at the top. And that was another thing that I wanted to show you all is if I come over here and I wanted to say, let's just look at the ones that as it relates to retail sales. And I can type that in and it's going to do the exact same thing and filter it based on exactly what you're looking for. If I continue to scroll down the screen, it's going to continue showing you the soft skills just like before, the job titles themselves. And one thing that a lot of employers love to do, and we get a lot of positive feedback on, is you can set up customized alerts within RTI, which is really powerful. So basically by setting up an alert, you can receive daily or weekly emails as jobs are posted or closed, just by simply clicking the alerts, and it'll walk you through step by step. And you can also make edits to ones that you had already previously set up. And when you create one, basically it's going to get carried over to the alerts page, and you'll receive an alert or an email every single time a job posting online that you set through the criteria that you preset is going to send you that alert. And so that's something that a lot of folks take advantage of. And as I'm walking through this, again, I know this can be a lot. If you're ever trying to query or recreate some of the things that we're looking at today, don't forget to lean on our group of very talented in-house economists and statisticians through the live chat feature. I myself still use it today, and it's really helpful if you're trying to recreate some of these things or not quite sure how to create an alert that you might be looking for, and they'll walk you through it, and they're very responsive, and we get a lot of great feedback on that. So again, just knowing that we could spend so much time in this tool itself, given how powerful it is, I don't want to take up too much time because I want to get to Anthony here in a second, but I did want to show you one thing that our clients also really like is, so within JobsEQ, you all can obviously know that a lot of this, just like I mentioned, within the analytics is exportable to whatever you might be working on. And so in exporting it, like let's say if you notice, see how there's this little hyperlink here when I switched it to the last 12 months showing that there's over 68,000 job postings for retail salespersons. If I click into that, it's actually going to pull up the list of the 68,000 plus job postings over the last year in this case. So it's going to show you the job title. It's going to show you the employer, the reported location, the start date, is it still active? And if the job posting itself lists the wage data, that'll be over here on the right-hand side. And so as I scroll down, you all can see that if we really wanted to go through it, we could look at all of those 68,000 plus job postings. And so again, all of this that we're looking at, just like I mentioned previously, is exportable if you wanted to. And as I look down to some of these different job postings and the employers and their reported location, one thing that you can do to take it a step further is, for instance, Macy's is hiring a retail visual merchandiser. So if I want it in Elmhurst, New York, if I click on this, it's going to actually open up another window and have all of the text directly from that job posting listed right here for you. And then to take it one step further, like I said, you can see the location, full-time, what kind of part-time, etc. When it was posted, this one happened to be posted yesterday. And if I click on view original, it's going to take you directly to the actual job posting itself. In this case, this one happens to be listed on Indeed. And so that's where obviously somebody would go to apply for that position. So again, you can see the extreme level of detail and the process that goes into this, being that we're pulling from over 40,000 verified sources, deduplicating them so that the job posting totals are accurate and up to date. And we update this every single day. And so again, RTI, our job postings analytic, is really powerful. It's one of my favorites. You can spend all day over here playing with the filters, the date ranges, etc. And don't forget that, we were looking at New York MSA, but you can query all the way down to the county, even use a custom region if you would like. And so with that, if there aren't any questions, what I would like to do is, also before I forget and turn it over to Anthony, is don't forget that we are looking at RTI within JobsEQ. However, if you would like to, for instance, embed this data directly onto your website via our Jobs Connector API, just contact us. We'll be happy to get you some more information and get you, with the right person who can speak to you more if you want to learn more about that. But if there aren't any questions, I wanted to, again, just thank you all for taking time out of your day to join us on this webinar. I hope this has been, I know it's brief, but a helpful run through of looking at some of the real-time intelligence job postings as it relates to the holidays and retail salespersons. And I hope everyone on this webinar has a very blessed and happy holiday season, as well as a safe and happy new year. And with that, I will turn it over to my teammate, Anthony, unless Holden, there were any questions or anything else you wanted me to address.
Nope, we're good for Anthony to start. And if you do have any questions, feel free to put them in the chat.
Thank you.
Well,
go ahead, Anthony.
Frank, thank you for the run through of RTI. For everyone, it's good to see some familiar names joining us today, so we always appreciate that. I'm going to run through a couple of holiday theme scenarios that lie more in the site selection realm with our what if analytic and our LaborEQ analytic. Before I do so, can I get a confirmation that my screen is showing to all the parties?
Yes, I can see it.
Fantastic. So as I had mentioned, we're going to look at the what if analytic here first and foremost. And what this will help us do is tell us the overall strength of our labor shed and if we can withhold an industry coming to our area. I am located in Cleveland, Ohio, so I'm going to use the city of Cleveland as an example here. And the industry we're going to look at today is what I have created through a JobsEQ customization: holiday stores. So think of any sort of gift, novelty, souvenir shops, and then I've added in a couple other NAICS codes behind it to really beef it up and have it apply to, if it were, let's think of a artisan market on a large scale. So with the holiday season being in full force, this is going to be a bustling market, and we're going to estimate that we need 500 employees to keep this thing going and withstand it. So we select our region, we select our industry, and we select the size of how big we would like it to be. And we simply run this analytic. We're going to see a few things here, and the first being the occupations listed. So we estimate here that we need the slew of occupations that we can scroll and see, and we'll associate the SOC code with them. But not only do we estimate which occupations, we estimate how many of each occupations. What would be the new employer demand, we will call it, to fulfill this industry? So in this case, we see we would need 154 retail salespersons to fulfill this holiday store industry of 500 people. We're going to need 46 first-line supervisors of retail sales workers, right? And the big thing, we see the color coding on the right-hand side here. This is what we call our potential candidates per opening. The potential candidates per opening is the estimation of, for every one job that we have, how many workers could potentially fulfill or apply for this job. Looking at the retail salespersons, we see 25 potential candidates per opening. Something like cashiers, we see 123 potential candidates per opening. So the higher the number, we see a stronger color change. Where do these numbers come from? If we take the employment number, and we're basing this off of place of residence as well as the unemployment number. So let's take 3,111 plus 695. We get our total number of what we'll call our labor shed in this case. We'll add those two together, divide it by the 154, and that gives us our per candidate opening number. Some other things that we can compare here, we can look at the regional average wage. How does that compare to the national average wage, and so on and so forth. Some things here, and this is a creation of our Chmura team. So Chris and her team of economists and consultants, they have estimated that anything over 50 potential candidates per opening will deem as a strong labor shed. We will see that in green. Obviously, the scale will slide as we get closer to red here. It'll go from green to yellow to orange to red, and we even see a dark orange here. Trying to see if there's any yellow for the purpose of showing. Doesn't look like it. But even though we see some dark colors here, that's not to say that this is a complete throwaway and that we cannot fulfill this occupation, because we like to lean on this employment extended category that we see right here. The employment extended category, when we click on it, and let's use it for the retail salesperson position, it's going to show us an example of what are occupations that have similar skills, knowledge, and abilities as the occupation that's currently in need. We see bartenders, counter and rental clerks, hotel, motel, resort desk clerks, right? All of these occupations that we could potentially look to and lean on to recruit and fulfill what we might deem as a labor shortage in this case. So the what if analytic becomes a very useful tool where it can help, again, on the site selection side for all sorts of industries. So if you have a potential employer coming to your area, you know the industry that they're in, how many people they're looking to bring. This helps give a good mock-up and example to show, do we have the backing to host this industry coming here? So looking at that on the holiday front, if we wanted to bring a holiday store to Cleveland, I think we could do it. We might have to go and reach a little bit here on the employment extended, but again, we have an idea of where we can go with that and how it can pivot. So that is the what if analytic in JobsEQ. I am now going to show the LaborEQ, and keeping in the holiday theme, we're going to use an example of the Festivus holiday. For those of you out there that are Seinfeld fans or were on the webinar last year, you might remember this and have it back by popular demand. I've got a lot of problems with you people, and now you're going to hear about them. For those that aren't Seinfeld fans, I don't actually have problems with anyone on this call. In season 9, episode 10, Frank Costanza, George Costanza's dad, we learned that he had invented a holiday way back when because he did not like the commercialization of Christmas, and he also found tinsel distracting. So finding tinsel distracting, he removed Christmas trees all throughout the house. And what did he do? He put up an aluminum pole in the living room, and that served as the Festivus decor. So in our LaborEQ example here, we're going to hit on the industry 3313, which would be our alumina and aluminum production and processing. So Festivus has now swept the nation in the United States here, and everyone in every state, every MSA is in on Festivus and aluminum poles. So we are throwing that up all throughout here. If we run this analytic, LaborEQ is very much on the site selection side, such as the what if analytic. The one thing this does, regardless of region access that you have as a JobsEQ user, you get a scope of every MSA in the nation. So a nice holiday themed color coding that we get here. You can estimate, again, the industry. You can estimate the industry size. that we run here. But also what's neat about this is we have a weighted scale that you can customize. So we have things like labor availability, a training pipeline, an age pipeline. So if there are certain factors that you think weigh in more heavily into this industry coming to your area, you can score them as such. Maybe the supply chain isn't a big factor and you want to score that less right here. That's something that you can do through this as well. So if we zoom in a little bit and we can kind of go to the darker green to see where the hotbed areas, right? Just east of me, Youngstown, the Warren Boardman MSA is big. The Canton Mass MSA is going to be big for aluminum production as well. We can scroll down and also compare here the top 4 in the area. I had previously clicked on the Columbus MSA, but what this does is whatever dot we click on here, I'm going to use let's say the California Lexington Park, Maryland MSA. We're going to click on that. It'll then bring in its decision grid, we'll call it, and score it or compare it to the other ones that we have selected, right? So where are the potential shortfalls here with these other MSAs throughout the aluminum production and processing manufacturing? And again, as I had mentioned, you get to look at all MSAs throughout the country. So we could go ahead and score something in Ogden, Utah, and enter that in to the fold here as well and compare it. Now, right here, we're just looking at the top 4, or in this case, the 4 we had selected. If we scroll back up a little bit, we see a decision grid. This decision grid is going to keep those 4 right here at the top, but now also show us a top 20 of the MSAs. Based off of the weighted scale that we had decided to select, it is going to show us how much that weight is involved or how much we score it. We can edit it here should we need it. Oh, let's put a higher emphasis on labor availability. We can lock that in and do so. And then we can run, right, that scenario here. So again, we're showing the decision grid and where these things all factor, but also scrolling down. Let's say if we want to show all regions throughout the country, we by all means can go and do that and see where areas improvement or where areas that we have strength here, right? We see in the Sierra Vista, Douglas, Nevada, although it's scored all the way at the bottom, here's one thing that's strength on the payroll side. Walla Walla, right? The industry comparison in Washington. That's a comparison factor right there that we can look at and point to with the LaborEQ analytic. This is an add-on tool in JobsEQ, much like the RTI is as well. Again, I had mentioned I see some familiar names in here, so I'm happy to help anyone walk through this a little bit further. I know Frank is as well, so feel free to reach out to anyone here on the JobsEQ team, and we'd be more than happy to help with that. Again, something that's exportable so we can look at this data a little bit further should we need here as well. With that said, I want to kick it back over to Holden, see if there are any questions that Frank or I could answer before we wrap up.
Thank you, Anthony. I, as a Seinfeld fan myself, I love the example. If there are any other questions, feel free to put those in the chat. Chris, Anthony, Frank, and I will hang around here for a few minutes. We do have some time, so if there are any questions about anything Chris talked about or Anthony or Frank with JobsEQ, feel free to ask those. And Chris, I did send you one we got earlier from Brianne Preston.
Yes.
If you have an answer to that. Okay.
Yeah, great question, Brianne. In fact, there's so much interest around participation rates and what's causing them to fall and stay so low that we're planning on having a webinar on that topic after the holidays. But specifically, the question, have you seen any of the analysis that suggests retirements during COVID are having a big impact on staff shortages? Any thoughts on that aspect of the workforce? So yes, and I'll go over that when we have the webinar early next year, but the participation rate for 55-plus-year-olds fell from 40.3 before the pandemic to 38%. Most recent data in November. That's equivalent to 875,000 workers. So yes, retiring individuals have had a big impact on the lower participation rate. Question is, can we get them to come back to the workforce? Clearly, they're now used to having greater flexibility. So if you want to try to get them back, you might make sure that the jobs that are available are more flexible. And also, we've seen quite a few people during COVID start their own business. And at first, when we had the lockdown, new business starts dropped tremendously. And then by the end of the year, we were at record levels of new business starts. And that has continued into 2021. So one other thing we might see is some of these retired individuals are now starting their own business, or any age bracket may be starting their own business. At least the data show that. And like I said, we'll have a webinar on that early next year.
All right. Well, seeing as there aren't any more questions in the chat, for those of you still with us, be on the lookout for the recording and slides coming to you sometime tomorrow. So I'll say this for Chris, Anthony, and Frank. I know we all hope that you have a safe and happy holidays. Thank you all for joining. Bye.
Thank you.
Thank you all.
Thank you.